Hi, I'm Soshana, and
I'm Joyce.
it's good to see you again.
I know. How's your week or weekend?
Well, this week has been busy.
Oh,
I
that's
mean, we had we had a good weekend, and that was busy. Like, we work all the time, all the time. All the
That's
time.
kind of like the blessing and
Yeah, exactly.
Yeah.
So it's okay. It's okay. This is our life.
Yeah.
And whenever we take vacation, we really take vacation. At
And
least
you work, play hard. So
yeah, exactly.
You were gone for how long? You were gone for over 2 weeks, weren't you?
I was gone 2 weeks exactly.
Yeah, so
this last time.
You can't complain now.
Not complaining.
No.
Not complaining.
For me, September 15th was the due date,
Mhm.
right, for business owners who file for an extension.
Yeah.
My business is run by the due dates.
Yeah.
Like almost.
Mm-hmm.
So March 15th is the due date for business tax filing for LLCs mostly,
Right.
like S corporation partnerships and things like
Mhm.
that. And so March 15th is the filing due date for the previous year's business tax return.
Mm-hmm.
And then April 15th is the due date for individual tax returns, right? And September 15th is the due date for business tax returns who file for an extension.
Okay.
Right?
Yeah.
So October 15th is the due date drop that due date for the individual tax returns who file for an extension.
So when's your break time? That's what I want to know.
But like my break time is right after April 15th.
Through?
And through the summer.
Okay.
Right?
So now it's getting ready
after August, around August time, that's when we kind of get back to like, oh, we gotta crank it to file it on time.
Okay.
That mode. So September 15th just ended, right, last Friday. So we're like, oh my God, so we're kind of like easing it into it this week.
Mm-hmm.
And October 15th is the due date. Like compared to other businesses though, other offices like ours, we don't extend a whole lot, relatively speaking.
Mm-hmm.
But, due dates are always kind of like you feel antsy and a bit anxious.
Yeah.
Yeah.
But you don't just do like tax returns. You do other stuff. Right?
We do other stuff. So my staff, we have 2 other CPAs who work with me, and I have enrolled agent, and accountants and bookkeepers. So my other two, especially my senior CPA, he's been doing this taxes for 35 years about.
Oh wow, that's a long time.
Yeah. So that's his like main focus. For me, I do planning, so that's where I spend more time with my clients.
Okay.
So basically, like second quarter ended, and we'll look at them numbers, and a lot of times third quarter, that kind of gives a really good numbers in terms of how a business is going to end the year.
Okay.
Right. And so then we look at these numbers and we go, okay, compared to last year, this is what had happened. To possibly reduce your tax liability, what can we possibly do?
Oh, okay.
So that's what we do. So I do more of planning. So that will be tax planning. And so that comes with a financial planning service that I provide, right?
Okay.
As a comprehensive financial planning, which kind of, I do an agreement, whoever wants or needs that service. And in that, I look at their current financial status.
Okay.
Like how's your cash flow? How's your protection? Where are you in terms of planning for your retirement? How is it, what can we possibly do for your taxes, right? Are you all up to date? Is there any opportunity for us to do something? And then we look at estate planning, right?
Okay.
So everybody is at different place, in terms of, okay, I need to focus on, for example, education planning for my children so that they will be ready for their college years. Some people are like, I'm almost done with that. What I need to really focus on is retirement. And so most of my clients are business owners, right? So my job is to look at your books and I go, okay, seems like there's some opportunity, meaning cash flow. Then should we do more on the retirement planning? Should we put more money into it? And do we want to take advantage of other venues? Like, for example, say your income is pretty high, so your tax bracket is high.
Mhm.
Then you're like, okay, instead of investing all my money into, for example, equity, meaning
Right.
stocks and funds like that, you may be interested in purchasing municipal bonds where you don't have to pay any tax
Okay.
on the earnings. So there are different things we'll look at. So
Mhm.
depending on where you are, we go from there, right? And the starting point is what's most important. So whenever I do this kind of like planning engagement, I'll ask for all kinds of information, the financial information, right? And I'll look at your information. I go, okay, benchmarking where you are, like really knowing where you are is key.
Mhm.
Because you know the garbage in, garbage out,
Right.
right? So
Right.
collecting most current data is very important, right?
Okay.
With that, I go, okay, this is where you are in terms of your financial being per se, and this is where you want to go.
Mhm.
My job is to kind of draw a plan, like a roadmap, to tell you, hey, you are here now. This is where you want to go in so many years later. This is, I think, what you need to do or what you can do to make that happen.
Oh wow.
So it's
That's
a lot of fun for me. It takes time though, and it takes time and also commitment
Mhm. From who? From you
The-
or from your
the
client? Okay.
Because a lot of times, just to think about collecting all your information, it can be a daunting task.
Yeah, I could see that.
You know, I'm like, where do I go? Oh my God, I have this here, like for example, you know, even for retirement accounts, you go like, I have traditional IRA, I have Roth IRA, I have 401k, or I have this there, I have an investment account, but I have a couple of different ones. I mean, you know, and you go like, I have insurance, but where's my documents? What kind of policy do I have?
Right.
Even thinking about collecting this information can be daunting. You know what I mean? So from a client's perspective, you kind of have to be so willing, right? And to get your things in order. And you need to be serious, right? Because it's going to require some work on your end.
Right.
Right?
Yeah.
It's kind of like getting ready for your house. You see what I mean?
Yeah.
You need to.
I have a feeling this is more complex than
It
getting
is.
ready for the house.
And exactly. And the thing is, like, it can be stressful in that, like, yeah, okay, I'm going to collect the data you need, so I'm going to have it. But back of your mind, you may be thinking, oh my God, I know I'm not ready. So there's very, like, emotional piece there where you kind of don't want to touch it yourself. You kind of don't want to even look at it because you're like, I already know I'm going to be disappointed, or I already know I'm not quite there yet. So maybe I should do it later, kind of thing. But I think you should not be worried about that. I think really looking at where you are gives you a really good, like, direction. In terms of, like, if you don't know where you are, you're kind of assuming a lot.
Right.
Also, not knowing gives you fear. I think that gives you fear.
It does. It does.
Because you feel like, oh my God, what do I have? I don't have anything, kind of stuff. But when you actually, like, spread it all out and take a look at it, you can honestly say, okay, I'm not that bad. You know what I mean?
Yeah, that sounds a lot like whenever people don't want to check their credit. Like they don't want to check their credit because they're like, I don't know. They have no idea what it looks like. You know, maybe they've been paying everything on time, but they're like, you know what? It's better not to know than to see it and be disappointed. But in reality, it's better to see it so that you have it laid out and you know which path to take. I mean, that's just my opinion, you know. And I feel like those people that finally figure out they're able to see what's going on, then they know what steps to take. Or they get the advice from someone that says, you know what, your credit is not, you know, it needs some work, but these are the things that you can do to fix that. So to me, that's what it sounds like.
Right. And the thing, as far as the clients are concerned, I think finding the right fit, finding the right kind of professional to get it ready, I think that's key. Like you really want to find the right person for yourself, and somebody who's good and competent, and who's going to be able to take care of you, who's had your interest in their minds. You know, I think that's the most important. Just like any other professionals, that that's the first thing. And actually, worst case scenario, this is what I actually really want to tell everybody who's kind of concerned about their retirement, right? For those of us who are like in their 50s and above, right? Is that it's not that bad actually. You know, what would be the worst case scenario? Say that you have not saved enough.
Right.
That just means when you retire, you may need to reduce your spending habit.
Okay.
Or work more, longer, right? Or do some more right now. Or maybe you were having your money all sitting in your savings account and it's not earning anything. You may be able to, you may just need to like diversify a little bit, maybe start investing a little bit, you know? And for those of us who are interested in like possibly getting a property to rent it out, you know, maybe thinking about it all these years, you never taken any action. So then by having it all spread out, it's not that bad. It's like, okay, I may need to work a couple of years more. Right? If you're healthy, we all know we live up to like at least age 85 or something if you're healthy. And we live longer, some of us do. And so, I mean, I think actually knowing where you are reduces your anxiety and your fear.
Right.
Because it's no longer unknown. You know what I mean? So I think it gives you that peace of mind. I think that's the first thing. I think that's most like helpful thing when you look at your stuff. Right?
I think that even, I mean, I don't know, this may be little, but I think that when you're getting to this age, a lot of people are, maybe they're finishing up, like they're paying off their house. And they may be like, well, oh, what a relief. And, they have some extra money now because they're not putting it towards the mortgage. And maybe that can go towards something.
Right. So, I mean, really, we all think that, well, you know, a lot of money quick, I guess that's what everybody wants. But it doesn't happen. It really doesn't, right? You have to bring value to people. Otherwise, why would anybody spend any money? Long term. Like, you may be able to, like, trick someone to do something today, but it's not going to last, right?
Exactly.
In order for you to build a lasting business or anything that you do, you have to be consistently doing it, right? And you have to provide some kind of value. Right? So when you have it, when we think that, then it's like, okay, this is what's been happening. Like you said, like my house is almost paid off. So then you may be able to get a loan if it makes sense for you to do so. So there are many different ways to handle your, I guess, grow your wealth per se, or manage it better, right? And a lot of times, like, you know, even the very basic stuff, we don't pay necessarily attention to, right? Like, okay, bringing money, making money, and then you're like, okay, this is what I bring in. Now this is what I do for now. But by looking at your situation and having a plan for so many years later, and I may say, hey, let's just save $500 every month. You know what I mean? And you may think that, oh my God, what am I going to do with $500? It's just like $6,000 only per year. But you'll be surprised what small things can really grow and
the impact it can make.
Because anything I think that we do has a compounding impact. You know, not only the money, but anything and everything that we do. You know, like compounding interest, we go, okay, but, you know, if you put money in there, then it's going to double it in so many years later, double. So even though you put $1 today, let's say it doubles tomorrow, that's $2, and then $4, right? $8 and $16. I mean, it accumulates in such a way that, you know, you cannot even imagine. Really, when you're looking at this compounding interest thing, it's like, okay, you kind of follow it for the first few years, let's say. But after so many years later, when it's compound, let's say you have $100,000. Let's say it's doubling in 8-9 years later, and then it's like 200,000, and then it's like 400,000, and then it's to 800,000. You know what I mean? So compounding interest has such value, and anything that we do has that impact. I think, for example, like, you know, you work, I work. I spend so much time, let's say, on a daily basis to expand my knowledge or even experience, right?
Mm-hmm,
Things are changing all the time.
Right.
But that 15 minutes or an hour every day that I put in
Right.
grows in such a way that, like, after a few years later, you are so much ahead of everybody else who's in the field, right? So knowing where you are and where you want to go, it's like, I just want to say it's not impossible.
Yeah.
And I think a lot of clients that I get to consult with, especially when they're in late 20 or late 50, they feel like I feel like it's already too late for me.
Right. Right.
Right.
But is it?
No, I don't think so.
Okay.
And I think the fear is really there because you don't know, because you've never looked at it. You think it's all unknown to you. You know what I mean? So, okay, let's say you bring in $5,000 a month right now, and it's like you spend it all for whatever. You know, you have children and whatnot, so you have to spend it all.
Right.
But you already know that you're living paycheck to paycheck. Where do I get this? Yeah, where's the room? There's nothing.
Where's it coming from?
Right? But I can guarantee you that if I were to see your revenue and I look at all your expenses, there's something for anybody. Really. Even if you work in the, these like retail stores like Walmart and what have you, right? The question is now, like, nothing is coming for free, right? So say that you bring in $5,000 for your family. Obviously, you have children and whatnot. That's not a whole lot of money.
Right.
So you go, what can I possibly let go of? So there are decisions, right, you have to make. But the thing is, you making a decision is a starting point. Sticking to it, right, is going to be very, very difficult. You have to discipline yourself to do it, right? So if you have a goal, though, it's going to be so much easier. You can cut things, you can make more money, you can try different things, and you know where you're heading.
Right.
You know what I mean? It makes such difference. Say that you're doing the same thing, right? But if you know where you're heading, and you're doing things so you can get there when you want it, right?
Right.
So setting up a goal and knowing where you're heading and having this kind of roadmap as to where you're going is going to give you a different perspective. And it's going to make it so much easier to follow through it, right, for you.
Yeah, but Joyce, can you give me somewhat of an idea? Okay, like I guess I have a question. Is this something that you offer just for your clients, or can people like reach out to you and ask, like, and you provide them with this consultation?
Yes.
And then how does that look? I mean, do you have a one-time consultation and then they get a list and then they go home and do it, or what does that look like?
Usually this is how it works. Obviously I provide the service to my clients too, but it's open to anybody, really. Because the bookkeeping, tax returns, and all that are totally separate engagements, right?
Okay.
So this is planning engagement. Usually what happens is, like, people say, okay, I have these questions. And so they just come on for one-time initial consultation.
Okay.
And we charge a fee for that. And usually it runs for up to about an hour.
Okay.
At which time you can bring all your questions, your previous tax return, you can bring all that. And if you have any very specific questions, then I'll answer them. And and then you tell me, like, this is what I'm worried about. This is what I want to do. Then if there's something I can answer right there, and then I'll answer all those questions. If it's something like, Joyce, this is where my investments are. What do you think about that? And I just answer, and then you can take it and you can do whatever.
Okay.
But from that meeting, you feel like, okay, I think I can really use the annual agreement, which is going to help me carry forward the decisions that I make.
Okay.
And then I can call you. So, okay, Joyce, you tell me this. I think I kind of understand it, but in order for me to actually take action, do something about it, I'm sure I'm going to have more questions. Right. So then we do. If there's a need, then that's when I explain to you about the comprehensive financial planning service is this, and this is what I'm going to do for you. These are the deliverables. Would you like that? And then that's when we strike a deal. Otherwise, you come in, you can go for a 1-hour consultation, whatever works for you.
And I mean, I guess being that you're an accountant, you can really look and see whether this person can afford
Absolutely
these options,
Yeah,
whether it's really feasible.
Yeah,
or not.
and also like especially if you're business owners, I can, and then you bring your tax returns and not, then I can see easily as to where the opportunities.
Oh, just with the tax return?
Right.
Oh,
yeah. It's not going to be comprehensive in any shape or form, but I mean I can just pinpoint a few things that you can do immediately almost.
So tax returns. What else? What kind of other information can you potentially gather that helps you get a better, like a clearer vision of what the potential?
Tax returns are a very good source for me.
Okay.
So that kind of shows me, as far as you reported it correctly, that shows me where you are and where your potentials are in terms of saving tax or moving your money per se. And another thing is that if you have any investments, retirements, that sort of thing, and you can pretty much tell me what kind of assets you have. For example, primary house, and this is what I have, blah blah blah. And so people are sometimes pretty rather simple in that this is all I have. And this is my concern. And then we can address it right there and then. But if it's something like, what, I want to really change the way that I've been doing things. I want to have sort of like a roadmap as to where I am now to where I want to go, right? Then it's going to require that comprehensive planning.
And Joyce, let's say that, I mean, some people invest in stocks and bonds like that, but you have no idea, don't know how that works or anything like that. Can they sit with you and talk about that?
Yes.
And then you'll explain to them what that means,
what they have,
how it's done?
Yes.
Yes?
Yes. Yeah. What I don't do would be like picking some stocks for you. That I would not do.
Got it.
But yeah.
Okay.
Individual stocks I would not do. But other than that, when people come to me, they have these accounts, even 401ks, but they don't know where their money is.
Right.
They don't know what it means really. So I just need to explain to them, hey, this is where it's at. This is what's happening. This is where it's been invested in.
So I'm in the real estate industry, right? So a lot of people, a lot of our clients, they invest in real estate. Could you have if they want to kind of gauge to see what would be a better choice, whether it would be to invest in stocks and bonds, whatever options you have available, or real estate. Is that something that they can sit and talk to you about?
They can certainly sit, and then I can certainly share my thoughts on what they have. But a lot of times, having real estate or properties versus investments in the stocks and bonds or funds, let's say, are two different things, right? Diversification within the investment is important. I think also it is important that you have totally different asset things.
Okay.
So real estate is one big piece.
Okay.
Investment in stocks and bonds and companies is another, right? So they're absolutely two different things. But not everything is for everybody.
Right.
First thing is, do you have that kind of asset to spread out, right? Do you have that kind of money to spread out? That's first. And second thing, are you comfortable? Is that something you like to do? Some people hate just hate the idea of buying a rental properties and manage it. Right. So in that case, what do? You show them
other
options, and you show them, what? It's not that scary. It's scary because you've never done it.
Right.
But if you were to hire, management company or whatnot, this is what it shows.
Right.
So basically my job is to show them, don't be scared because you only see the top and you think you're never going to be able to do it. What I'm going to show is behind the scene, this is what's happening.
Okay.
Behind the scene, this is what's happening. Would this be something you'd be interested in? And can you continue doing it?
Okay.
So, for example, there's this long time ago, this client of mine, he's like, well, I don't want to go crazy with my investment, right? I don't want to go crazy with it, but I want to like have like such and so returns on my investment. So you know what I'm saying? So then my job is to explain what it means to take risks, right? What it means to get returns. So then the person can, you know, decide what they want to do.
Right.
Another thing is that the client who comes to me for planning purpose, they don't have to hire me to do their tax returns. They don't have to hire me to do their bookkeeping, right? They don't have to hire me to be their financial advisor. They can keep all their advisors if they want to.
Okay.
Then I'll be the one planning it, and they can take it to wherever they need to take it to.
Okay.
And take care of it.
All right. So you help them plan it and help them execute it?
Yes, if they want me to.
Okay.
So what I'm trying to tell you is, you don't have to do everything with me. Because people feel like, oh my gosh, if I go to Joyce, Joyce is going to want everything. It's like, no, it's not like that at all. And what I try to be objective on the things. And so whatever you have, my job is to review it for you and explain what you have. Right. And then, you know, if you want to plan it out, right? Yeah. And then prepare for your future per se, then that's what, you know, what I do.
Okay.
Right.
Well, that's good. That's good to know. I mean, but I think that, you know, your clients, because they trust you, I know, you know, speaking from experience, they probably want you to, you know, help them as well with their financial planning, you know, because I feel like that's something that you need to do with somebody that you trust.
That's true.
Because that's a big deal.
The thing is that the reason why I'm becoming more passionate about this planning is this. Even if I've saved you some tax this year. Say that your tax was like $5,000, and I did whatever with you. We do whatever, and then we reduce it down to, let's say, $2,000. Now you have about $3,000, right? So I go, okay. Next year you come back, and I'm like, what did you do with that $3,000? You're like, I don't know. I don't have that money. It's somewhere. I don't know. I didn't use it. Yeah. So what I'm thinking is like, did I really make a meaningful impact on your life, financial life? No, that's not how I feel. It's like, okay, like if I saved you $3,000, you should have done something with it. You have to grow it or do something. You know what I mean?
So let me ask you something, because this has happened. Say that, let's say I have a client or something, and you know, and doesn't have like a specific plan. That person sold their house and they made a good profit from the sale of their house, and have money in the bank, and they don't really know what to do with it. That is a good opportunity to maybe do a consultation with you, and you can like give them some options of what they might want to consider doing, so that may help them multiply this money. Okay, well, I think I have some people that need to talk to you.
Yeah, so the thing is, like, money is interesting. Yeah. And I think a lot of times you may come to me and say, oh, Joyce is going to do something for me, and I'm going to multiply my money. And sometimes I may recommend you that, like, you have to hold on to that money. Okay. Instead of investing it. Yeah. Because I've seen cases where you have $10,000. Yeah. And then you come to me, Joyce, I want to go to the market with most return that's potentially possible. I'm like, that's not the money you want to go to the market with. You need the money as an emergency fund. Right? Okay. So everybody's in different location, different place in life, and different things. And so that's why I say meeting with someone like me is going to give you such value in that, you know, you don't go all these different directions, and at the end of the day, you lose money. Right. You know what I mean? So, anyways. Okay. He's saying the time is up.
Okay. Well, it's always so interesting to talk about these things, you know, things that they kind of cross your mind, and you're like, oh, it seems complicated. I'll deal with it later.
Yeah. It happens a lot.
And now it's that time when now it's later.
Yeah, sooner than later, like today.
Yeah. So it's good to talk about this. And, thank you for being that resource for me and for the viewers as well. So
Great.
Thanks again. I'm Soshana, and
I'm Joyce.
It was good having you with us this week.
Thanks for watching this week's video. If you have questions on anything we covered, or you'd like to ask us, just leave it in the comments below. We love to hear what you have to say about what we talked about and what you want us to talk about. Please like us on Facebook, follow us on Instagram, and subscribe to our channel. See you next time.